On Friday, May 15th, market sentiment remains extremely tense following the brutal Black Thursday sell-off. The inflation bomb, triggered by a 6% surge in US PPI alongside persistent CPI figures, has effectively decimated hopes for a Fed rate cut in June, with the 10-year Treasury yield firm at 4.488% and the US dollar index DXY nearing 98.82. Non-yielding gold continues to face immense downward pressure. On the news front, while the Trump-Xi summit in Beijing offers some geopolitical heaven context as leaders attempt to de-escalate Middle East tensions, these efforts have been overshadowed by India's black swan move to hike gold and silver import duties to 15%. This policy shift has dealt a devastating blow to physical demand and long-term investor confidence. Technically, the RSI 14 has dropped to approximately 34.5, nearing oversold territory and reflecting intense short-term selling pressure. The MACD is locked in a death cross below the zero line with expanding bearish histograms, while the KDJ continues to diverge downward at low levels, signaling that a definitive bottom has yet to be formed. Immediate support is anchored at the $4,650 handle, with a stronger floor at $4,600. On the upside, resistance stands at the $4,680 breakdown level, followed by the psychological $4,700 mark. Gold is expected to maintain a weak consolidative tone ahead of tonight's U.S. retail sales data. Disclaimer: this content is for informational purposes only. Invest at your own risk. Please subscribe, like, and share. Thank you for watching.